any farmers want to develop the land into agriculture land, of course they are getting a support from the land development bank. The limit whatever they are expecting from the individual bank, so which is regulated by the RBI, because individual people, they want to live in the society. Total contribution for GDP, which is 13.9%. So we are not comparing. So because the population completely depending for the agriculture product. Hello everyone, a warm welcome to one and all. I am Natesh, lecturer in Commerce, Vidhyaashram, First Grade College, MYSURU, the Temple of Excellence. We are in the Unit 2, Session 2, second semester, Law and Practice of Banking, BCom, okay, which is related to RBI. So, and today my agenda. So the measure of credit control, which RBI main functions. In the last section, I just told credit control, why it is very important for RBI taking a responsibility, and the RBI and agriculture credit. So because any country, if they want to develop, because they are the neglected section, the RBI want to support the agriculture, which is completely neglecting nowadays. That's what the RBI is taking a responsibility. And even the RBI and the industrial credit, if the number of industry increasing because they want financial assistance, the RBI, how they are fixing, how they are promoting the industry as well as agriculture. And the objective of credit control, why the credit control, the responsibility, held responsibility are taking RBI. So because of what and all the objective, in the coming slides you will get more clarity. The measure of credit control. The measure of credit control, which is repeated, and NABARD, National Bank of Agriculture Rural Development. And the term lending institution, the terms, because which is related to short term, medium and long term. Okay, and moving forward, the first one, the measure of credit control, because unless the RBI is not taking any measure for the credit control, it is very difficult to the Indian banking system. So that's what the RBI is taking a responsibility for the complete credit control. Okay, so how much they want to individual bank, the commercial bank want to lend for credit. So which is the credit control is a function performed by the central bank or RBI. So to control the credit, that means what? The commercial bank, they are, whenever they are going for lending a loan to the needy people, so the RBI is taking a responsibility to control. They are fixing some limit. Okay, that is the demand and supply of money, because each and everything. So those who are needy people are expressing they want loan facility, borrowing loan. So which is a demand and supply simultaneously balancing. That's what RBI is controlling here. So say liquidity of the economy, because always whenever you are maintaining a liquid positions in your economical development, so the money flow, the currency flow, okay, easily which is available. With this function, the central bank regulate the credit granted by the commercial bank to its customer, because there are too many commercial bankers located. Okay, in the commercial bank, the customers, whenever they are approaching for the loan facility, the limit is sanctioned by the individual bank, so which is directly controlled by the RBI. So for example, if anybody is expecting a 20 lakhs, the RBI is setting a limit for individual bank for this particular customer, this sector, you have to lend the loan only for the limit. So they want to follow the guidelines whatever the set by the RBI. It aims to achieve the economical development with the stability as well as to manage the inflation and deflation. Inflation means the currency rate are increasing, deflation means the currency rate are decreasing. In that case, simultaneously the economic development, which is completely the flow from the money, the flow from the currency. Next, the objective of a credit control, why it is very important. The objective, the main objective of the credit control, okay, which is to attain stability in the internal price level. So you have to maintain one kind of stability whenever the transactions are going, okay, borrowing and lending, and to obtain stability in the foreign exchange rate, because the foreign exchange, the international currency, the responsibility taken by the RBI, that's what to maintain the stability. For example, when you try to compare with the Indian currency and foreign dollars, okay, so the currency rate slightly is varied every day. So that's what, whenever you are maintaining a stability in the foreign currency, which maintain the exchange value of the currency. Whenever you are exchanging a currency, of course, the value is very important. So next, to maintain the stability in the money market, which is a commercial or short period, which is talking related to commercial treasury, which is, okay, the complete money market through liquidity and control measure. and to promote overall economical growth and development. To complete a nation, if you want to promote or develop, so the complete the economic responsibility, which is talking related to demand and supply of the currency, okay, inflation, deflation, okay, so the payment system, everything which is related to economical concept, by maximizing income and employment and output. So to maximize the income, of course, the RBI is taking a responsibility how they want to maximize, what is the rate of interest they want to fix, which is your neglected section, okay, everything. To promote nation interest, complete the nation interest means what? So if anybody want to invest or deposit or open an account, because everybody want a safety, that's why the RBI, whenever they are taken responsibility, so of course the investors are keen interested to go for opening an account. So here the measure of credit control, we classified into major two types. One is a quantitative, or we call it as a general method, or one more is the qualitative or selective method. So both are different only. So which in the general method, the first one, the bank rate. The individual bank, whenever they are lending loan or getting loan from any substitute bank, so what is the rate they are following? Okay, so for example, if they want to give loan for the customer, what is the rate of interest they are charging? So whenever the individual bank they are getting a loan, what is the rate or they are charging? So the everything is controlled by the RBI. So the at the time of bank rate, okay, or repo rate or repurchasing rate. So open market operation, because which is related to complete security, okay, or bond, completely whenever the buying and selling process, okay, when for example the inflation rate, whenever government security rate is increasing, whenever the deflation rate, the security rate is decreasing, at the time of decreasing, everybody is showing interest to purchase, okay, and the variable cash reserve, there are two ratios we are identifying here. One is CRR, cash reserve ratio. Individual commercial bank, their deposit, whatever they collected from their customers, so they want to deposit in the RBI, which is related to cash reserve ratio for the safety purpose. And one more is the statutory liquidity ratio. So the individual commercial bank, whatever they accepted, deposited from the customer, so they want to keep their individual bank. So for the day-to-day operation, that is nothing but your statutory reserve ratio, so which is coming under the quantitative or general credit method. So under qualitative or selective method, so the first one, credit ration. Credit rating means what actually? Whenever the individual commercial bank, whenever they are giving a credit facility or lending a loan to the needy people, okay, what is the credit limit they want to maintain? So what guidelines is given by the RBI, the individual commercial bank, how they want to implement and follow, so which is related to credit at the time of lending a credit, what guidelines the individual commercial bank they want to follow, or nationalize or schedule bank. And next, direct action. Direct action, for example, the RBI is completely taking a regularity act body, so the control, the individual banking system, whatever, how they are operating, so everything they are taking a responsibility for operation. Individual bank are monitored by the RBI, so which is, if they are individual commercial bank, they are not at all following the rules and regulations set by the RBI, directly RBI can take the action for the individual bank, because they are not following the guidelines set by the RBI. And moral persuasions. Moral persuasion means what? If any operation, of course the rules and regulation, policy, guidelines based on the morals, whatever the set by the RBI, individual bank they want to follow, or the financial institution follow, whichever is coming under the RBI. Next, publicity. So here the RBI is made compulsory, whatever you make any modification, change, or giving an offer for the industry to develop agriculture, what is the rate of interest, which is the revised rate, everything you have to publish. So that's why the RBI is taking a responsibility. At least in the television, you are giving a bulletin point, which is a reader, audience, or your customers, they can observe, or then they are showing the interest to whenever you are publishing the clear information. You need to disclose properly. And regulation of consumer credit, because the consumer nowadays everybody is going for the credit or they are going for the installment. So the limit whatever they are expecting from the individual bank, so which is regulated by the RBI, because individual people, they want to live in the society, the standard of living which is completely based on the day-to-day requirement. So the credit which is consumer based on the consumer credit. Next, regulations to margin requirement for the security loan, because every business are operating, they are charging the margin, what percentage margin is required for the day-to-day. Even the security loan which is a government security or private security, so which is talking related to government security, what is the margin you are expecting, individual commercial bank are expecting from the security. And next agenda, the RBI and agriculture credit. It is very important for any nation, the credit which is related to agriculture, to just promoting for the farmers or agriculture product. So the RBI is taking a, you can say, which is a development concept. So agriculture development, which is regarded as a prerequisite of economical development of country. Any country, if they are not depending agriculture product, so how they are getting, if there is any scarcity, what exactly we can do? So that's what the RBI is taking a responsibility to improve the agriculture. So because 70% of population in the country are engaged in the agriculture sector, so nowadays we can say which is your neglected section, means we can say which is a agriculture sector. So that's what the RBI is just for promoting the neglected sections like agriculture. So they are introducing too many schemes for agriculture. And the total share of our agriculture allied sector in the terms of percentage of GDP, the total contribution for GDP, which is 13.9%. So we are not comparing. So because the population completely depending for the agriculture product. So you need to promote the agriculture product. So percent during the year of 2013 and 14, the GDP contribution 13.9% only. So the agriculture export constitute fifth of the total export. The agriculture constitute the fifth of the total export. Whatever we are trying to export for other country, when we have a abundant source, then only we can go for exporting. So we are only standing for fifth of, okay, the total export of the country. The RBI realized the basis of contribution of the agriculture sector in the overall economical development. The complete economical, which is developed country or non-developed country, no doubt agriculture contribution is very important. So that's what the major responsibility taken by the RBI for agriculture sector. RBI and agriculture credit, here because some criteria set by RBI for the agriculture purpose only. So here the agriculture credit is the key factor of accelerate the agriculture development in India, because the major product which is a complete economical, the standard of living, the people can expecting every day the agriculture product. Any agriculture product want to improve our development, so RBI want to support. So here they are giving a support for the agriculture product. So here the credit need for the farmers and three kinds. Okay, because the farmers are depending too many raw materials which is related to agriculture, fertilizer, seeds, machinery. So exactly they are taking a support, financial support. The first short-term credit, because the three types, we classified into three kinds of terms we can say. So first short-term credit, to finance agriculture operations like purchase of seeds and pesticides and fertilizer, because the farmer, whenever they are trying to concentrate for agriculture, they are depending the basic requirement, the short period credit support, okay, which is related to seeds and pesticides and fertilizer. And the second one, medium term. So you know there is a term is fixed for short term, we can call it as 0 to 12 months. Okay, but medium term credit terms is required. Of course, the farmers, they want to purchase, for purchase of slungs and agriculture equipment, tractors and other implemented to cultivation through land with the help of modern implements. Because the agriculture, not only they are depending for the short credit, because they want to equipment in other supported equipment. So obviously the agriculture, the farmers want to expect from benefit from the RBI. So here thirdly, long term. So here the term is given more than 1 year, less than 5 years. Okay, and of course the third one, long-term credit for agriculture development. What long-term? The land is you have to convert for agriculture, so you need to finance support for long period, right? So here, such as improvement of land, you have to improve the land, you need a long-term finance. So whenever the farmers are getting, what kind of subsidy they are getting, and the construction of boundary and horticulture, so very important for agriculture purpose. So that's what they are depending for long-term credit facility. So agriculture and credit, the RBI being a central bank of country does not provide finance directly to the farmer. The RBI is not providing any financial support directly to the farmer. So with the help of other commercial or agriculture bank, related agriculture bank, so they are supporting, RBI is supporting. It provides the direct facility to agriculture through state cooperative bank, through media for cooperative credit system. The RBI thus provide 3 types of loan for agriculture. One is short term, medium term and long term, whatever we discussed in the last slide. So next, so which is very important bank for agriculture development? National Bank for Agriculture and Rural Development, because the most of agriculture which is based on the rural area, so you need to develop, of course, the NABARD, we can call it as simple National Bank for Agriculture and Rural Development, which is main focus on agriculture development and rural development. So NABARD was established in the year of 1982 July. Okay, so to oversee and develop the entire rural credit system, because the farmers are always, you are identified in the rural base. Of course, the rural development, which is completely based on the, which is contribution by the NABARD, including agriculture credit. Consequently, the major of the agriculture credit department of RBI and the entire undertaking of ARDC was undertaken over by it, because consequently the farmers, they want to develop the agriculture product, they want to concentrate for agriculture. Okay, so they want to concentrate or want to increase the agriculture product, means of course they want to support. So it took over from the RBI refinance and development and statutory inspection of the cooperative bank. So we know there are too many banks which is related to agriculture purpose. The Cooperative Agriculture Bank, so agriculture farmer cooperative society, everybody they are promoting the finance. So the cooperative society based on the Cooperative Act which is operating. Moving forward, so NABARD provide rural credit by way of refinancing, because they are getting finance, individual cooperative society or any agriculture bank, they are getting finance from RBI. So the same finance can be refinanced to the farmers for the purpose of agriculture improvement and loan and advance for the state cooperative bank. Land Development Bank, if anybody, any farmers want to develop the land into agriculture land, of course they are getting a support from the Land Development Bank, so which is already covered in the first unit. RRB, Regional Rural Bank, and through approval for financial institution for the financing protection. So the financial institution, how they are getting finance, of course we need to think. So marketing, even the productions and even the farmers want to market their product. Okay, till then where they want to store, how they are finding a required demand. Investment activity related to agriculture and other allied economical activity, the overall rural development, we can say. Okay, so RBI and industrial credit. So rapid industrialization, because anybody can understand if country is developed based on the agriculture and even the number of industry are located. If the number of industry are increasing, of course the day to day, whatever the consumers or customers are expecting, either routine or very occasionally they are purchasing the complete industrial product produced by industrial requirement, the consumer product which is produced by the industry, okay, either small scale, large scale, medium scale, okay. So for the purpose of fulfilling the consumers' requirement. So, industrialize key accelerator of economical growth and development, because everybody expecting the cost of the standard of living. When the number of product are increasing, the production size is increasing, the consumers are getting ultimate benefit. Of course, so which is the RBI is taking a responsibility to develop the industry in our country. So, prerequisites for industrial development are 5 M's, that are man, material, machine, management, money. It's very important. 5 M's are everywhere we can find commonly. So money is the primary essential. For money, industrial come from the industrial finance. If anybody want to start any industry, of course the financial support, they are getting support from the RBI. Okay, so directly the RBI is not supporting. So they sanction some limit for the individual commercial bank which is related to industrial purpose. If the limit is crossed, then only the application is forwarded to the RBI. Money is very essential. It necessitates an adequate supply of short-term and long-term finance for the purpose of industry fixed and working capital. Because not only for establishing, if anybody entrepreneur, they want to go for work smoothly, the working capital support is provided by the RBI. Okay. So moving forward, the small scale industry, the number of components or the spare parts we are expecting from the small scale industry. So if the number of a small scale industry are increasing, of course, if anybody want to start a small scale industry, if they have any idea, if they don't have any idea, they are getting a technical support from the any development institutions. Confirmed by urban and semi-urban as well as rural area, the industry wherever you can locate, but the financial support and technical support, overall support we can expect for industrial development. So the small and large industry have to their typical borrowing need short-term as well as long-term credit. The small and medium or small and large. So because industry, starting an industry which is not simple. Okay, so we are depending too many input resource. So of course, everything we want to go for investing. So the commercial bank have been provided short-term credit to the industrial sector, but they did not favor for long-term industrial finance in the pre-independence era, because everybody they want to start business means it is not so easy. So if you don't have any idea, you have to go for attend the training program to start industry. So the major 3 finance is required: short-term finance, medium-term finance and long-term finance. You know, long-term finance is required for purchasing a equipment and industrial area or site. Okay, so everything support expected by the entrepreneur, those who are really interested. The capital market also underdeveloped in the country. The capital market, share market, security market, we can call it as. Here the farmers, whenever they are approaching for the any financial institution for the agriculture purpose, the term lending institution is very important. We know there are 3 types of short term and medium term and long term. Any farmers, they are expecting a finance support from the any financial institution. What is exact requirement the farmers can identify. So here the following terms lending institution, that based on the term, I just now told you short-term credit period which is starting from 0 to 12 months. So why the farmers are expecting a finance support for short period? So the purpose they want to identify properly. And you know there is a medium-term finance which is more than 1 year and less than 5 years. Why the farmers are expecting a medium-term finance? So either purchasing an equipment or the purchasing a tractor. So exactly the farmers want to expect from the agriculture land. So industrial requires whenever they are expecting a industrial purpose, the same purpose will be applied for the institution which is related to industrial starting. So there are too many industries are located in our country or worldwide. So the either small scale industry, medium scale or large scale assembly industry, everyone they are expecting a finance support. So which is applicable for institution or industrial purpose. So the following terms lending institution have been started with the Reserve Bank initiative and support. So RBI is given guideline only for the industrial bank, those who are promoting the industrial activity or industrial production, because we are talking related to nation economy. So when we are talking about national economy, the number of industry if you want to increase, of course, the support is expected from the industry, from the RBI as well as Industrial Development Bank. So the Industrial Financial Corporation of India, which is established in the year of 1948. So the main motto of this bank is actually to increase the industrial production. The second, the State Finance Corporation, because each and every state, one state finance corporation is located, which is established in the year of 1951 and 52, okay, in between. So last one, the Industrial Development Bank of India, so which is shortly we call it as IDBI, which is the main target motto is increasing the production, which is related to industrial product. So whenever the number of industry are increasing, so of course we are in the developing stage. Okay, keep on watch for next section. Thank you.